All right, joining me is Matt Hougan, Chief Investment Officer at Bitwise, who, of course, is one of the world's leading crypto asset managers. Currently, over $11 billion in client assets. That's across ETFs, separately managed accounts, private funds, hedge fund strategies, staking. And I'll tell you on the ETF side, they're actually now up to 20 ETFs in all, nearly $6 billion in assets, including their most recent launch, the Bitwise Hyperliquid ETF, ticker BHYP, BHYP, very nice ticker symbol. And Hyperliquid will be the focus of our conversation. And so, Matt, it is always great having you on the podcast. Thank you for joining me.
Uh, Nate, it's always fun to be on. It's good to see you. And yeah, thanks for having me.
All right. So the Bitwise Hyperliquid ETF, this just launched a little over 2 weeks ago. And I was looking this morning, already it's nearing $70 million in total assets. There have been 10 straight days of inflow since launch. I looked at trading volume. That's been excellent. So to start, I'm just curious, what's been your initial reaction to the launch of BHYPE and this early investor interest?
Yeah, it's exceeded my expectations. I knew it would be successful, but it's done even better than I thought. I think this is probably the best single asset crypto ETP launch since Bitcoin when you adjust for the size of Hyperliquid and the scale of excitement. 10 straight days of inflows, nearly $60 million flowing in. I think that's going to accelerate from here. I think crypto was hungry for a news story. Hyperliquid is that news story, and the ETF hit at the right time. So yeah, it's been a huge win.
And just for background, obviously Bitwise has continued to expand its crypto ETF lineup. I mentioned at the top that you're now up to 20 ETFs overall. But from my perspective, and this has always been the case, you are being very thoughtful here. You're not just launching ETFs because some random crypto asset exists. And so I'm also curious just about the decision making behind launching a spot hype ETF. Like, why did Bitwise decide to pursue this to begin with? Because you were early here. Just about every other ETF issuer did not pursue this.
Yeah, absolutely. It's sort of like a nuclear switch sort of thing, Nate. You need two things to be true for Bitwise to launch an ETF. So we need to think that there's demand in the market, right? The signal here was that Hyperliquid was performing well, Hype was performing well, and it had a very strong community that had strong opinions about that. We like to see that. So you need to think it's viable in the market. But then you need to underwrite it from an investment perspective. That's what you were saying about Bitwise being selective. We won't launch on any crypto asset, only assets we believe in. In the case of Hyperliquid, here's what we saw. I think crypto has been trying to reinvent how finance works for the last 10 years. And essentially, every attempt has been interesting, exciting, but had a major pullback. You could think of a platform like Binance, incredibly innovative, incredibly successful, huge numbers of users, new things like perps, attracting rig attention, but it's a centralized offshore exchange with significant regulatory risk. You think about something like Uniswap, an incredible decentralized trading protocol, enormous volume, sometimes more trading volume than Coinbase. It's amazing, but the token was launched on the Gensler era, right? When you couldn't have a token that accrued value, which makes it a challenging investment. I love Uniswap, but the token has some token economic challenges. Or you think of things like DYDX or some of the other sort of perp future protocols that have been out there, but have had challenging UX or not enough throughput. Hyperliquid, because of when it launched and because of where it came in the journey, put all of those things together. It's a perpetual futures exchange first and foremost, but expanding into other areas. It is incredible UX because crypto now is in this broadband era where you can do 100,000 plus transactions per second and make it very easy to use. The token accrues value directly from the fees generated on the platform, right? Every 99% of all trading fees goes to buy back Hyperliquid. I think that's possible because we're out of the Gensler era and into the Atkins era. So it was sort of finally we had a solution to this problem of reinventing finance. We thought that was going to scale. I still think it's going to scale. And so it checked those boxes and we thought it would be a great asset to launch.
Okay, and in that description you just gave of Hyperliquid, I think you gave some high level detail. Let's get into the weeds just a little bit. And I guess if you were to explain Hyperliquid to a novice, which I must say, that's truly a gift of yours, by the way. You've always been able to boil things down in a way that anyone can understand. And so, no pressure here, but
Oh,
please
wow.
do that for Hyperliquid.
Well, let's focus on the first place that's making waves, which is really in the perpetual futures market, right? So perpetual futures are an idea that dates back all the way to Robert Shiller. Us in the ETF industry might remember the macro shares, which were sort of a version of an attempt at this. But the idea is, unlike traditional futures contracts, which expire at a certain date, perpetual contracts are, as the name suggests, perpetual. So you can gain exposure to something through a futures contract and it will never expire. And there's a mechanism that allows that to do it by charging a fee to maintain the position. But you can think of it as an exciting innovation on the futures market, which is a giant, right, multi-trillion-dollar market, which has this big flaw, which is periodically the contracts end and you have to roll them over. That's a pain. Perpetuals solve that problem. So to one extent, the first place Hyperliquid made its name is by offering perpetual futures, first on crypto, but then also on traditional assets. You can trade the S&P 500, you can trade oil, you can trade other commodities. And there's some interesting things that come along with this capability. You can trade them 24/7, 365. They never shut down. So Hyperliquid, for instance, took a big step up at the start of the Iran war when all other exchanges globally were closed, because that started on a Saturday, but Hyperliquid was open. And so it became the default way to trade oil. So it's this new type of futures exchange, but it has broader ambitions than that. It really wants to be a super app where you can do all sorts of financial activity. So they're launching prediction markets on there. I wouldn't be surprised to see them move into spot. You can think of it really as a competitor to CME, Robinhood, etc., with a crypto underlying that makes it very easy to use. And that's sort of what it is. And it's growing enormously quickly on a global basis.
And on the easy to use, I know you've heard this slogan around Hyperliquid before, but I keep hearing it's DeFi with a TradFi-like user interface.
It's totally right. Yeah, you don't need to be crypto native to use Hyperliquid. You'll feel very comfortable there. It is easy to use. This is a little bit what I was talking about earlier. All of these ideas existed in the past. A perpetual futures exchange, there were multiple instances. DeFi applications, there were multiple instances, but they were all imperfect in some way. Hyperliquid sort of perfects them. To borrow an internet analogy, there are plenty of businesses we use today on the internet that failed previously, right? We used Chewy to get pet food delivered, and pets.com is one of the most famous blowups in internet history, right? We get things delivered by Amazon instantly, and Cosmo.com tried that in 1999 and failed. Often these ideas are good ideas, but they're gated by technological factors. Hyperliquid sort of came along at the right time, right place, right regulatory setting, right technology setup to combine all the promises of DeFi into a new, easy to use platform. And that's why it's really taken off so much.
On the note of the right technology setup, I think one question some people have is, you were mentioning some of the other decentralized exchanges earlier that run on, say, Ethereum or Solana or whatever, but Hyperliquid is its own layer one blockchain. Why does that matter?
Yeah, it really matters for two reasons. The first is that it controls its own destiny. So if you run on Ethereum or you run on Solana, you're dependent on how that network is functioning and whether it's functioning well. To make an analogy, imagine that you had to get from Atlanta to Washington, D.C., and you could go on I-95, or you could go on your own highway that you built and you control all of the traffic. You're probably going to have a more consistent path on your own highway because you can set the fees, you can set the number of cars on it, you can set the rules, you can set the policing, as opposed to being on public infrastructure. So the first reason it's important that Hyperliquid has its own layer one blockchain is it controls the rails. It doesn't matter if fees spike on Ethereum or if it jams up or if Solana goes down, it controls its own rails. And then the second piece is more technical, which has to do with what in crypto is called MEV, which is extracting value from the ordering of trades in specific blocks. When you don't have your own layer one network, you're more subject to people extracting those fees, which makes it more costly for users to trade and transact. They don't get the same quality of execution. When you hold your own blockchain, you can redirect that sort of MEV fee back into the value of the entity. So it's both more deterministic, that it goes at exactly the pace you want, and then it's actually a better user experience because you don't have this value seepage that you get when you use these other blockchains. It's not the only way to run these things. I'm not saying that anything that runs on ETH or Solana is bad, but it does have these unique advantages if you can get a high quality layer one blockchain up and running.
And that description right there is why I always say you have a gift for boiling things down in a way that anybody can understand. We'll get to the ETF here in a moment, but can you talk a little bit about the regulatory backdrop in terms of access to Hyperliquid? Because this isn't currently fully available to U.S. investors, correct?
Yeah, that's right. You can try it right now. Go type in Hyperliquid. You'll get a big red banner at the top that says you can't access this. Look, this is an offshore perpetual futures exchange. It's available to the world, but not US investors because we have very strict regulations around derivatives exchanges here in the US. I suspect that will change over time. You're certainly seeing traditional derivatives exchanges pointing out the risks of the growth of this platform and trying to slow down its entry into the US. The global market is a very large market. Look, ultimately, I think Hyperliquid will be available to US investors, but there are miles to go until we get there. But I don't think you have to think that will happen to be bullish, right? There are a lot of investors in the world, a lot of offshore hedge funds and offshore traders who can access Hyperliquid and drive its growth really significantly, even before it gains full access to the US market. But you should know that this is an early emergent exchange, and there are more regulatory risks here than there are in the CME. Like that's just objectively true. So there's no reward without risk. There are definitely risks here. Regulation is one of them.
So given that regulatory backdrop, and admittedly, I should know the answer to this question. I'm a little ashamed that I don't. But if U.S. investors can't use Hyperliquid, how did you get this ETF through the SEC? Did this fall under the generic listing standards? Again, I'm ashamed I don't know the answer to that.
No, that's a great answer. Yes, absolutely. Falls under the GLS in that they're futures-based ETFs and European ETFs that allow you to gain exposure to hype. So in this specific instance, there's some leveraged ETFs that were approved, and that triggered the sort of entry rule. But I would say more broadly, Nate, there are plenty of instances of businesses and entities that have things approved globally, but not in the US, which we can still invest in, right? The Toronto Stock Exchange is a ticker. There are many examples like that. Companies that have drugs approved internationally, but not in the US. But it's a risk worth noting.
Okay, so we've talked about the regulatory backdrop. You've talked about Hyperliquid, the exchange itself. Let's talk just a little bit more, if you don't mind, about the Hype token. And perhaps you can just explain some basics here and maybe the role that it plays in the Hyperliquid ecosystem. I know you alluded to earlier sort of the buyback mechanism. I was looking this morning. Hype is now a top 10 crypto asset overall. It's done that in less than 2 years?
Yeah.
16 billion market cap. So yeah, talk a little more about the token.
It's really remarkable. So the way that it works is when you trade on the Hyperliquid platform, you generate fees like you would on any derivatives exchange. And 99% of those fees go back to buying back this token, which creates strong upward pressure on the price of the token because you have a persistent bid, right? It's running at extraordinarily high revenues, extraordinarily high buybacks, $1 billion plus a year, which is driving the price up. An interesting fact, if you look at it, recently set an all-time high on price for the Hype token, but it did not set an all-time high on market cap for the Hype token, which is sort of a mind-bending idea. And the reason for that is that it bought back so much that the circulating supply had come down. So even though the price was higher, the actual market cap was lower. The real, a lot of people ask, why does Hype have a token even to begin with? There are a number of answers to that. But one of the first and most important was it was a way to jumpstart the growth of the Hyperliquid exchange, right? It was sort of a solution to the cold start problem where the value of any network grows with the number of people participating in that network and the liquidity on something like an exchange. But how do you get the initial liquidity? And the Hyperliquid token incentivized that early growth. And then because of this buyback feature, people are incented to stay on board because there's this perpetual buying motion of this token. People make an analogy to a stock buyback. I think there's, like many analogies, value in that. It's sort of similar to that. It's obviously not exactly the same, but you do get this buy pressure from all the fee generation on the platform that has driven the price up. And if you think Hyperliquid is going to be a globally important financial platform, it has a long way to go, right? It is a tiny fraction of total derivatives volume globally. If it even got to 1% or 5% of global derivatives volume, you're talking about a 10, 20, 30, 40, 50x in terms of transaction volume. So there's a lot of growth potential if it in fact succeeds at the scale many people think it will.
Yeah, and I think very simply, rising trading activity on the platform itself, because of the mechanism you just described, that's going to directly benefit token holders moving forward. Talk a little bit about the staking. That's how the network is secured. My understanding is if you stake HYPE, then it can reduce the trading fees if you are trading on the platform. Can you just talk a little bit about that?
Yeah, absolutely. And let me make one more point on that buyback mechanism because I think it's important. We've sort of been trained in crypto to think that tokens don't accrue value because most tokens don't have this flywheel where fees generated on the platform go directly to buying back the token. If you think about something like Uniswap, a very small fraction of fees and only on specific areas go towards this sort of mechanism. Hyperliquid is the far end of that, right? 99% of fees go directly towards buying this back. So the flywheel spins really fast. I think it's going to take investors a while to realize that this is a Gen 2 token. Like it's a new version. It's not like the past. And as people sort of underwrite that and realize that, I think it will drive real interest. Yeah, you mentioned staking. Obviously, with a layer one blockchain, you need the blockchain to run and function. And most modern blockchains are proof of stake blockchains. Bitcoin is the outlier with the old school proof of work approach. Hyperliquid is a modern blockchain with a proof of stake mechanism. Bitwise is one of the larger staking providers in the Hyperliquid ecosystem. We stake about 70% of the assets in this ETF. And then we also stake additional assets in our core staking business. But yeah, it's as you described, it's participating in the ecosystem. You earn hype rewards from it. There are certain advantages for stakers from a trading perspective. But really, it's just similar in many ways to ETH, Solana, and other staking ecosystems in that you earn rewards for making the network run.
Okay, so now that everybody has all of that background, let's touch on the ETF, the Bitwise Hyperliquid ETF, BHYP. I know the fee is 34 basis points, though I believe that is way for another couple of weeks here. But regardless, very competitive fee. I also know you're mentioning staking. BHYP offers in-house staking, which is a differentiator. And you can comment on either of those. But is there anything else you would mention about the ETF itself? I know pretty straightforward. It's a spot ETF. It holds the underlying asset. Any other points you would make here?
Yeah, I think the two you mentioned are really important. Obviously, a very competitive fee. The less you spend, the more you keep. Strong staking with a vast majority of the assets from one of the largest staking service providers in the Hyperliquid ecosystem. Staking in-house allows us to offer a better deal to the ETF than we would if we worked with a third party, and we're fortunate to have that business to tap into. And then, of course, with Bitwise, maybe the unique thing that you get is the support of the Bitwise ecosystem. Anyone can ask us any question about crypto at any time, and we'll respond within 24 hours from my research team. So if you're a participant in BHYPE and have a question about Hyperliquid, you can send in a question and my team will answer you in 24 hours. That's sort of the bonus thing that Bitwise does uniquely, and we're pretty proud of it. But yeah, think of it as a plain vanilla crypto ETP with staking added on, like a 2.25% yield currently, that gives exposure to one of the most exciting projects in crypto. I think it's a pretty good offering. And a
I
great
love your
ticker, as you mentioned.
Eh, fantastic ticker with BHYP. And I love what you just said there about answering questions within 24 hours. I will tell anybody if you're going to invest in crypto ETFs, obviously that responsiveness is great, but make sure your issuer actually understands crypto. And this is what you do 24/7.
That
You're not dabbling in other areas of the market. You focus on crypto. So I just want to make that point.
I love that. Yeah, bull or bear market alike. Crypto is all that we do. Questions at bitwiseinvestments.com. Send us an email, test us out. I love to put my team at work. They're sitting right outside there. They're ready to answer those questions.
I love that. And on the ETF too, did I see that Bitwise is actually buying Hype in that you're using a portion of the management fees from BHYP to buy and stake Hype directly on the firm's balance sheet? Do I have that correct?
That's exactly right. Yeah, we'd like to align with the community with a portion of the management fee. In the Hyperliquid ecosystem, a core part of that community vibe is this buyback mechanism, right, where you maintain it. So we didn't want to be taking the management fee and liquidating Hype, creating selling pressure. We wanted to do the opposite. So we take 10% of the proceeds, hold them on our balance sheet. We're aligned with the growth of Hyperliquid. Those assets are staked. It's something we try to do across all of our ETFs. You may remember on BITB, our Bitcoin ETF, we donate 10% of the proceeds to Bitcoin open source developers. So we find it really important to align with the community to understand the community's goals. In this case, this is central to sort of the ethos of the Hyperliquid community. And so we will do that in perpetuity. And we're excited to be Hype holders here at Bitwise.
Okay, so for investors who maybe do take an allocation to BHYP, I'd love to have you talk more about the investment opportunity moving forward. And as we always say, neither you or I have a crystal ball. None of this is intended to be any sort of investment advice. But I did see where you said something along the lines of Hyperliquid should be valued as a global super app, right? That the addressable universe, it's not the $2.5 or $3 trillion in crypto. It's a $600 trillion market for global assets. And so maybe you can elaborate on that, what you mean by that, and just talk about the potential opportunity moving forward.
Yeah, absolutely. That's the really important part here. This is not a crypto app. This is a financial app that uses crypto in the back end to create a new financial experience that in many ways is better than the traditional system. So the growth of Hyperliquid is not tied to how many people want perpetual futures exposure to Bitcoin, right? It's tied to how many people want to use this new ecosystem that's 24/7, 365, that lets you cross margin between your crypto, your equity, your bond, your commodity, your prediction markets, all together in one ecosystem with this super slick interface that never goes down and processes transactions instantly. Already today, Nate, about 50% of the volume is in non-crypto assets. I think that will eventually be 90% plus of the volume. I think that's really important because I think people underestimate the size of the market that this is going after. Again, it's not a crypto app. It sort of belongs in XLF, to make an ETF analogy, right? Like it's one of the fastest growing emerging fintechs in the world. It just happens to be in a crypto architecture. And so the investment you're making is a bet that that will continue. And as it continues, more fees from transaction activity, more buyback activity, and the asset could rise. It's still a relatively small asset on a circulating supply basis, right? It's not, it's like $15 billion or so. It has a huge amount of space to grow as people sort of understand the scale of what it's trying to accomplish.
And I think, as you know, I always like to take a full 360-degree view of whatever asset or investment that I'm discussing. What about competition for Hyperliquid? Like, how do you think about that as a potential risk moving forward, whether we're talking about competition in the DeFi space or even in the TradFi space? How do you think about that?
Yeah, it's massively important. They're both going to come for Hyperliquid. Everyone is looking at Hyperliquid right now, whether you're a new DeFi protocol, an existing DeFi protocol, the New York Stock Exchange, the CME, et cetera. Just go to the Wall Street Journal. You'll see those traditional exchanges trying to slow down Hyperliquid, not because they're anti what it's doing from a perpetual futures perspective, but because they want the ability to catch up. So there is going to be significant competition for Hyperliquid in the future, and there is no guarantee that it will win. I will say the architecture is really elegant. The user experience is extraordinarily good. The community is very strong. So I think it has a very good chance at succeeding. And if it does, you could see the market cap grow very significantly. But there's some competition already. And a year from now, there's going to be a huge amount of competition. And so Hyperliquid is going to continue to need to execute to stay ahead of that. You shouldn't just buy it and sleep on it. You'll have to monitor how it's competing in that space.
Okay. And then lastly, before I let you go here, again, coming back to maybe how investors and advisors should think about allocating to the HYPE token or the BHYP ETF. I know you and I have discussed this before, that perhaps Bitcoin is best viewed as digital gold, store of value, uncorrelated asset. We don't need to get down that path, but you have Bitcoin sort of over here, and then you have other crypto assets that are much more similar to technology plays, technology equity plays. Is the latter, is that the right mindset for HYPE if somebody is considering an allocation?
Yeah, that's absolutely the right mindset for HYPE. The way I would think about it is as an exciting financial application that you want exposure to. You might be excited about Robinhood. You might be excited about like Stripe on the private side. You might be excited about Revolut over in Europe. You might be excited about Hyperliquid in the futures and derivatives market or the prediction market area. That's how I would think of it. It's not digital gold. It's not even a traditional layer one. It's a financial application that is arguably the fastest growing in the world with a shot on a very large, multi-trillion-dollar market. That's the right way to bucket it. And so far it's executing well. It's still very early. I'll add one more anecdote that makes me both bullish and understand the location of where Hyperliquid is. I was at a single family office conference 2 weeks ago in London. I introduced the idea of Hyperliquid to the audience. 0 people had heard of it, right? So it is still very early. I think most people aren't aware of how important and how disruptive a technology it is. It feels like that early moment where the world is just waking up to something. I think that's where we are on Hyperliquid.
Well, Matt, this has been absolutely fantastic. I always enjoy visiting, and I know sometimes maybe you think I'm over the top with this, but I truly appreciate your ability to help educate people on crypto. So thank you for that. Congratulations on the initial success of BHYPE, and thank you for joining me.
Thank you for having me. It's always fun.
That was Matt Hougan, Chief Investment Officer at Bitwise. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. Thank you for joining me, and see you again next time.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.